Okay, 37 odd points off on the Nifty, so it's right there. There isn't very much by way of change as far as the index value goes. Let's talk about technology, IT preview in particular. Shashi Bhusan is Senior Research Analyst, Institutional Equities at Prabhudas, Lilladher. Shashi, thanks very much for coming on. Great to have you with us here. Prashant this side. So Infosys will report this Tuesday. They'll put out a guidance for 15. Let's get your expectations.
Okay, so we are expecting 0.2% constant currency growth for the company, and there will be tailwind of 0.3%. So very much in line with what management commentary was. So if you remember, last quarter they increased the guidance to 11.5 to 12% for the full year. Then middle of the quarter they said that they are going to be more towards the lower end of the guidance and not towards the upper end. So my calculation was that they will do somewhere around 11.7%, which implies 0.2-0.3% kind of growth in the constant currency, and then there was a cross currency tailwind for them, so they will have around 0.5% growth. The continued cost efficiency will drive the margin little higher. 20 basis point is what we are factoring in. This quarter had the currency had appreciated towards the end of the quarter. That will result in the asset translation losses, and at the bottom line you might see a little muted quarter. So there won't be any growth at EPS level. For the next year, financial year, we are factoring in 6 to 9% kind of guidance. And looking at the deal closure they have, we believe that this upper end of guidance is pretty achievable. Now, market somehow might be factoring a little lower. So if the guides on the upper end closer to 9%, that should be construed as positive for the company as a whole.
Right. No, you're saying market is a little conservative. You're a little aggressive. The consensus you mean is a little aggressive.
We are towards it. Yeah. So consensus is somewhere around 5 to 8% for FY15 guidance. Okay. So and we believe that the kind of deal closure they have witnessed over the last 3 to 4 quarters, that clearly indicate that they could actually go ahead and guide to even 6 to 9% as well. On the upper end, I am little 1% point higher than what consensus might be expecting. What I'm saying is, the current price actually reflects even weaker than what consensus might be expecting. So even though they guide what in line with consensus, which is 6 to 8% kind of guidance, still the stock will move. If they guide in line with my expectation, which is on the higher side, the stock can jump 4-5% or maybe slightly higher on the result day.
Right. For the quarter, what is for the fourth quarter? What is your expectation? I'm sorry, I missed that earlier.
Oh, okay. So we are expecting 0.2% constant currency growth and 0.3% cross currency tailwind. So 0.5% in overall US dollar term, 20 basis point margin expansion because of the continued cost efficiency. At the bottom line, we are expecting muted quarter because there will be asset translation losses as currency appreciated towards the end of the quarter.
Right. So looking at what the stock has done recently, you believe that if the numbers are what your actual numbers and the guidance is according to what you are saying, the market will look at it very favorably, even if it is consensus, especially the guidance, which is a little lower than where you are, still the market will like what it sees. That's essentially what you're saying. So there is no downside here.
Yes, there is no downside that I see. If let me put things in context. What actually happened globally? Tech stocks are getting hammered because of the inflated expectation and multiple. But Indian IT companies are not trading at that elevated multiples. We are not trading 14 times, 15 times sales like LinkedIn or Facebook kind of companies. But in the tech sell-off, we are seeing some sell-off happening for the Indian IT as well. Now, if you look at even from based on my estimate, Infosys is not going to deliver anything less than 200 kind of EPS for FY15. That means stock is right now trading at less than 16 times, 15 times for FY15, and we have reasonable visibility, I would say, for this earning. There is limited downside. I would say there is no downside whatsoever unless and until the economy crashes and most of the project which they have signed actually get stalled. In that kind of environment, there is only an upside potential. If I look at the number which has come yesterday from ISG, the deal closure has been really strong. Okay, and these deals will start ramping up in couple of quarters. So our sense is market is too much worried. That sell-off which has happened more because of the technical factor. I think currency not moving the way many of the experts might have expected. There is only upside risk to the technology stock and not much of the downside risk from the current level.
What about margins in Q4 and what do you expect to hear from the management for fiscal 15?
Okay, so for Q4 we are expecting 20 basis point improvement for Infosys. For fiscal 15, in quarter one there will be wage hike for Infosys, for TCS. Okay, Wipro will have a staggered. HCL Tech will be more towards the end of this year, which is Q3 and Q4. So for Infosys, we will hear an impact of around about 200 basis point because of the wage hike for Q1. But most of these margins should be recouped over the next 3 to 4 quarters. So I would say for FY15 as a whole, although management will try to hammer down the expectation, but FY15 as a whole should witness slight improvement in margin from what we have done in FY14, because our exit rate of margin is much stronger than for FY14 than FY13. So we are entering at very strong margins. So that benefit will flow down in FY15 completely.
Any impact of the senior level exits, etc.? You expect to hear anything on that?
I don't see, Mr. Murthy and both Mr. Murthy and Mr. Shibulal have again and again communicated that most of these exits have no business impact. There were few guys who could result in some business impact, but on an overall, on a portfolio basis, things are going only in a positive direction for the company. So we don't expect any material impact. Now, if there is any, for a company which is $8 billion annual run rate, $8 billion plus annual run rate, if there is a 50 million, 30 million business going anywhere, it's not material. It's not which is going to swing the needle. And that too in an environment when the demand environment is very, very strong.
Right. Infosys had about $4.5 billion in cash and equivalent at the end of December 2013. There's always a question of whether there'll be a special dividend. Anything you're expecting?
There is a possibility. So I'm not ruling that out, that there could be a possibility of a special dividend. They have been distributing a special dividend in every 2-3 quarters. And this company has got one of the best cash generation. If you look at free cash flow to EBITDA, this company has always stood out compared to the peers. So they will keep generating cash. It's not that it's going off in this quarter. So their dividend policy has been very steady. Every now and then, every alternate year, they do give a special dividend, finding one reason or another. So I'm not ruling that out completely.
Fair enough. Shashi, thanks very much for coming on. Great to have you with us here on that, and hope to catch up with you once the results are out Tuesday. Thank you. Let's take a break. We're back in 2. There's more on the other side. Stay with us. Okay. I hope we've not rolled the break, but before I take that break, Raghuram Rajan spoke in Washington, D.C. at the Brookings Institute, and over the next couple of hours, you'll see a fair bit of that speech, snippets of it, and of course the full speech as well later in the day, in a couple of hours from now. But I just want to highlight and play out one specific portion where Raghuram Rajan, the RBI governor, is asking for better cooperation and coordination between the world's central bankers, because he argues it's an interconnected world, and policies of powerful large central banks like the US Fed can have unintended consequences and spillovers in pretty much most of the rest of the world, especially emerging markets. Listen in.
I have called earlier for better